at 68.39. Let's go to Chicago with Blue Line Futures, Oliver Slope. All right, Oliver. First, let's start on the row crop side. What have you been watching?
The fun money movement has been something to keep a close eye on and of interest. Obviously, corn over the last month or so came under pretty heavy selling pressure, and we saw funds go from net long to net short last week. Last week, they were net sellers of just shy of 100,000 futures and options contracts, which puts them net short about 85,000, which is the largest net short since October. So interesting money movement there, especially this time of year where you typically see maybe a little bit of premium come back into the market with the uncertainty. And aside from that, we've got good fundamental backdrop in the corn market as well. So the fact that the funds have been selling into what seems like a good fundamental backdrop is a little bit of a caution flag. We tried to rally midweek last week on Wednesday and Thursday, and then kind of gave some of that ground back on Friday's trade, which really doesn't set the table that well here to start this week. We did trade a little bit higher overnight. We're kind of struggling to hold on to that momentum. 450 to 455 in that July contract is going to be the pivot pocket that we're keeping a close eye on. We need to see consecutive closes out above there to neutralize some of the technical damage that has been done over the last month.
And then over on the soybean side, man, we got hammered last week on that RFS news.
Yeah, when you got bean oil limit down, lock limit down for almost the whole day, it was really tough for the beans to get anything going. The positive lining, or silver lining there, I guess, is the fact that we were able to hold that low on Thursday, or Wednesday on Thursday, and then Friday, and holding some ground here today. 1035 is the low end of the range over the last month or so. That's going to be a must-hold line in the sand. We continue to be fairly optimistic on beans, both old crop and new crop. But like corn, we're at some technical levels that are a little bit concerning. And if we're not able to defend these support pockets, there could be more technical pressure to come. On the counter side to the soybeans, though, funds have actually been building a net long position there. So good to see some buying interests come into that market over the last couple of weeks.
All right, Oliver, hang on just a moment. Couple of things I want to tee up for you after the break. One, livestock, and two, T-bills. It's all ahead. Market Day Report continues in a moment. I'm Oliver Slopes with Blue Line Futures. What are your thoughts here?
Volatility has certainly increased in the cattle complex over the last week. We saw that especially true on Wednesday and Thursday, where we made the new contract high reverse, finished sharply lower, and that led to some additional technical pressure in Thursday's trade. The interesting thing to note during those two big down days on the back of that reversal was that open interest actually increased, which means new shorts were entering the market at a bigger pace than short or longs were exiting. So somebody is turning a little bit more bearish. Maybe that's a hedger, maybe that's a speculator. It's really tough to tell. But I found that notable that it wasn't just long liquidation. It was new shorts coming into the market. That puts us at a really interesting spot here to start this week. We have stabilized some. The fundamental backdrop remains firm. So it'll be interesting to see how it shakes out. But again, the fact that you're seeing new short interest come into the market is a little bit of a caution flag in the near term.
All right. 30-year T-bill hitting 5% overnight. That following a downgrade of our credit rating here in the U.S. by Moody's. What are your thoughts, and how will that impact ag?
Well, nothing like waiting till about 5 minutes left in electronic trading on Friday afternoon to release a statement about the credit downgrade from Moody's. And that kind of sent us into the weekend with a little bit of a head scratching thing. How are the markets going to react? So far, markets are, hanging in there for the most part. We are seeing the 30-year bond, as you had mentioned, out above 5%, which is concerning. The equity market started the Sunday night trade sharply lower, but have regained some of that lost ground and are on the verge of trading back on the plus side. And then the U.S. dollar is getting hit hard as well. So a lot of push and pull in terms of money movement goes. I'm a little bit cautious here. I think the downgrade is cause for pause. And after this recent almost V-shaped recovery in the outside markets, I think you could see us settle down, take a little bit of a breath, and retreat a little bit in the near term. Nothing like we saw at the start of April, but I think a pullback would be healthy here.
All right. Oliver, great to see you. Thanks for coming in. Oliver Slope is with Blue Line Futures. And